Alright, guys, welcome to my YouTube channel. Alright, so using the strategy that we posted yesterday, we would like to backtest it with God and see how it performs. Alright, so I'm going to replay this and I'm just going to randomly select a part and see and see the risk reward, how it's going to play out. So let me just okay, I had first replay. Okay, no, let me just get this replay button. As you can see, the order flow or the market structure for gold has been in an uptrend. So I'm just going to cut it from here. Why am I cutting it from here? I will show you why. All right, so let me just zoom in the video. So if you look at this video, as I earlier stated, those who watched the first video, we need liquidity. We need a liquidity sweep, whatever, is it a tether sweep, whatever people call it. So I'm just going to get my two here and I'm going to place it below this low. So what I want is prices to break down this low, and as you can see, this is very bullish. Gold is very bullish. All right, so let's just zoom in. Let me just play this. Okay, guys, we did break through. So we broke this low, took out this liquidity. If I'm looking at this structure, okay, let's start from here. We can see some FVGs there. You can see some FVGs. So those that do not know, just a quick recap. Let me just get this two here. So this thing from here to here is what we call our fair value gap. As those that do not watch the first video, make sure you do, because this is where the information is. So this is our FVG. Now, so the first confluence that we can take off, so immediately you're trying to enter a trade, you should just make sure that you write down your confluences, as this will help you. So firstly, I've got my liquidity here. Sorry for that. I've got my liquidity. Let me get this text from there. I type liquidity, so I can take liquidity off. We've taken out that low. Now, if I look at this, so we are bullish, still bullish. So I want a candlestick to close above this fair value gap, and if it closes above this fair value gap, that's my inversion FEG, which is another confluence that I can enter this trade. So now let's play this. Okay, as we are going down, we can still create our FVGs. So I can see a fair value gap here. Okay, so there, then as well, let's continue playing this. Continue playing this. Okay, guys, let me just replay that again. I think that was too fast. Okay, let me get this replay. Select bar 2 and here. Okay, so we've taken out that low. So now, what am I seeing? Okay, so this is our FVG, right? Let me play. Okay, okay, we've invested this fair value gap. We've invested this fair value gap. Now, here is the thing, those that are aggressive, right, immediately that candle closes, you might long from here and cover this last low. If you have a lot of money, we talk about more consecutive ways, and there to there, then we can target a 1:2 risk reward, right? A 1:2. All right, so let me just zoom this chart in. Or is that too much zoomed? All right, so now let's play it. Okay, 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 okay. All right, it's playing out. It's playing out well than I thought. Okay, we did a little retracement. Are we going to be stormed out? Now, guys, here's the thing again. As we are going, as the chart, if you are by your charts, so this you can set this, and if you're working, you can go to your normal jobs and do whatever you are doing. But if you look at this structure, if you're on the screen like me, mostly what you do is every time the market moves, you're drawing out your fair value gap. So from this level to this level, I had my FVG. Now this is my ideal type of entry that I would want to enter from. So from there to there, I'm going to get my long position, which is a three dotted line here. I'm simply going to long this. From there down there, so my stop loss will be, I'm just going to cover the last low. So the last low of the AVG, where was my last low? Am I going to be stomped out? This is raw again. Time is really hard in making these videos, so make sure you subscribe. All right, so let's just carry it up to that level where we had already established, where we had gone long from. All right, so if I play this, we are tapped in. We are tapped into the trade. The trade is playing out. Now, let's see if we hit TP. Okay, guys. Wait. Are we stumped out? Have we been stumped out? Let me just draw this line from this level. Seeing if we have been stumped out the trade. Seeing if we had been stumped out the trade. Okay, we're still in. So as you can see, we're still in. Let me just delete this and just let me just use a trend line tool for you guys to see this. Alright, so this trend line tool, then I draw it down here. I want to see if I'm going to be stumped out this thread. Is it okay? Let me nah okay. Sorry again. Let me just get this two here. So from this level, let me just okay, this is a perfect level. Then let me just extend it this side. So I'm seeing if I'm going to be stomped out this chart. So this first FVG gap is still in place, and this is a daily. This is a swing structure, guys. And so this how many days would you be in this chart? So from here to here, guys, at least close some positions. But let's see. So I think they we formed some sort of resistance level here. Those that trade resistances. Let me just get a horizontal line, horizontal ray, sorry, and place it here from this level. You see some sort of resistance going on there. Okay, so let me play it again. Okay, we in business. Okay, let me just zoom this out so we can see this one hits TP. All these positions hit TP. So this was a 1 is to 2 and this was a 1 is to 2, and all of them had hit TP. Now let's continue trading. All right, so what am I saying? So from this level immediately we went down here. Do we have an FVG? Yes, we had an FVG here. So prices for here, there's an F3 candlestick formation, stop loss down this, pushed it up, and here we had an FVG as well. We have not seen any reaction from this one, and here we had an FVG. So now here's the thing, after we break this structure, right, to break this structure, okay, let me just do this, see where can we do our entry from, where can we enter from. Okay, so here we have our RVG. Let me just continue marking these levels. So remember guys, it's not every time that you win. It's not every time that you win, it's not every time that you make money. Sometimes you have to lose money. And the model here is you lose money to make money. All right, so this is the structure here. So this is what we have. We had an FVG tap and it went up to the upside. So now let me just zoom this in. So our initial target is this high. So this is our initial target. So guys, so immediately we took out liquidity here. Sorry, let me just okay. So this is your target. But no matter, I'm not, you see, okay, so this is our target, guys. So now I wouldn't immediately, if I was in this trade, I would have waited for this trade to break this level. But my risk reward is really is stick to a 1 is to 2. If I go beyond, that's 3 is to 1. But the target was this high there. So now we want to wait for us to break this high. And again, so which means I would have entered from this level. Could have entered from this level. Okay, because we want to break that one. For the sake of this video and showing you guys that some trades are not worth it, these two trades are really enough. Should we enter from that level? Okay, let's enter from that level and see what happens. Let's long from this position. Remember, there's no trade that's a holy grail. But again, looking at this position, we had broken out this mini low. We had broken out this mini low. So I would want to trade this below FVG. So I would have placed the stop loss there. Okay, let's see what happens. Sorry, let me see what happens. Stop loss below this candle and we target a 1:2. And for this case, we want us to break through, so we can just simply go for a few pips up there. So let's play this out. Okay, we did not retrace back to that level. We did not retrace to this level yet. Okay, so now we've broken this high. So now the way the market works is immediately we break a recent high. We've taken out this liquidity. We took out this liquidity. We saw a shift in direction. So we've taken out this liquidity. We want the market to retrace. It's always the same pattern. So those that want can still trade this to the upside, but I will not. In this video, no, my students will not. We wait for the retracement. So the market rallies up. Are we seeing any retracement? Okay, this is the beginning. So what I'll do is I'll simply resume this, and this is our high. This was our new high here. So what I'll do, another two that I did not include in the first video was a Fibonacci retracement too. So get a Fibonacci retracement too from the low to the upside there, to the recent high and the recent low. So immediately if we replay this, replay this, replay this, replay it. Okay, okay, I think this is the beginning of this retracement. Yes, so we place this to here. And what am I seeing? Let me just quickly zoom this chart in. So if I zoom this chart in, I'm looking at this FVG that we did not tap, right? So this FVG, we did not tap into this FVG, and as well, we want something below the 50 fib level. So my ideal would be after the break of structure. So this is a structural gap. So this break of structure and we've got our FVG there. Those are really strong fair value gaps. So break of structural gaps are very strong FVGs and here. So I'll just quickly extend this. So these are possible zones where the market would retrace from. So my idea would be to go long from that level. So this is a break of structure. Okay, so the fib level is there. So we're going to go long on the Fibonacci level. So let me just click these two. So we're going to go long from this level here. And our stop loss should we okay, stop loss placement, we can target these two FVGs. Let's just target these two FVGs. Remember guys, the risk reward is a lot of pips, guys. It's a lot of pips. So we're going to target this high and we want to break the structure. Okay guys, let's just stick to our 1:2. 1:2. 1:2. Okay, so now let's see if the trade will play out. Okay, okay, we did not retrace back, we did not go down to this. So again here, so this becomes our new low after breaking the structure. So what I'll do is, I think I'm replaying this too fast. Okay, so here let me just go down to this level, right? So okay, so we wanted, after the break of structure, we wanted the prices to drop into this level here, or this level, so that we get long, but we did not retrace that far. So what did we see? So this was our, what did we see? Then just play that to play it again. what okay, so we had broken this structure. So this becomes this is a structure that we broke, so this becomes our new low here. I don't know if you're following me. If you have any questions, you can drop your questions in the comment section down below. So this is our new low now. So let me just zoom this chart in again. So from there, what am I seeing? Let me just remove this. So this is our new low. So here, okay, okay, I'm seeing an entrance. We could have entered from this position. So here we had our FVG, we had our FVG. Guys, the size does not matter as long as you can see the space. Then that is our FVG. Okay, and what did we see? We had invest this fair value gap. After investing this fair value gap, we had this week and that week overlap. So that is our breakaway bag. We should not see prices go down this level. So our stop loss would have been this candle and target 1:2. That would have really played out well. Okay, so let's continue drawing our AVGs. So our AVG here again with this break of structure here to the upside. Let's just continue drawing our AVGs. We want to see a retracement. Let's get our two here. Let's get our two and places to here. So if I do this, you can see this, right? So okay, so we had a break of structure here. We're waiting for a retracement. Let's play a two. Let's play this. Okay. Again, you have a fair value gap, so you continue drawing your fair value gaps as you are moving, as you are trading. So this is our third fair value gap. Now, guys, this is a two. I think I've already drawn this two here. So again, what we do is we get our fib retracement two and take it where the low is located, push it up to where we're going to see a retracement. So let's start again. Let's replay this. Okay, I think this is the beginning of that retracement we are looking for. Okay, so the thing is again, guys, don't forget that we do not want to trade above the zero point 0.5. So what we want to trade is below the zero point 0.5. So we wait for the price to drop, wait for the prices to drop. Are we going? Okay, again, guys, we increase this Fib level, Fibonacci. Let's increase this. Let me just zoom this in and let's continue playing it. Okay, I think for okay, guys, sorry, I played it fast again. Okay, I think the speed is 10. I think we reduce the speed because okay, so let's do this. As I said, we do not want to trade above the zero point 0.5. What you want to do is want to trade below the zero point 0.5. And what are we seeing? So this is the zero point 0.5. Okay, so let me just extend this to this level, and let me also extend this to this level. Let me extend this to this level. If okay, let me extend this to this level. Okay, so now what we're going to do is wait for prices to retrace, right? Okay, so prices retrace. So yes, prices to retrace. Okay, we tapped into this zero. Guys, this is a very good level. With if prices would even go up to down to this level, would still have entered the trade, guys. Because if this one, let's say you have a $50, put $25 on this AVG, is below 0.5, $25 goes, then you put another one down there, you do the same thing. But for this one, I'm willing to enter the trade. Why? Firstly, why am I entering the trade? Okay, let me just write why reasons why I'm entering the trade.